Good morning, all. Welcome to Anand Radi Morning Commodity and Currency Podcast. For today, let's see what are the driving factors for these markets. Starting with precious metals. Yesterday's US data presented a balanced Goldilocks scenario wherein inflation is declining while employment remains strong with no sign of impending recession. Meanwhile, focus still remains on US economic data, which is scheduled today, that is PPI, and consumer sentiments for the same. So gold will be witnessing a stable and strong move up till this data. Technically, for gold futures, intraday support is around 72,900 and 72,500. Resistance is around 73,400 and 73,900. Coming to energy update, crude oil prices are trading lower today. It's fourth straight session of losses as a supply threat is seen easing with falling risk premium and easing weather related to concerns. Today's focus will be on EIA weekly inventory, which is likely to report a second straight week of fall after last week heavy drawdowns. With OPEC monthly report and inflation lined up, volatility is likely to persist. WTI oil is approaching its initial weekly support towards 80.50 per barrel, and prices might reverse from the same. Technically, for crude oil futures, intraday support is around 6,850 and 6,780. Resistance is around 6,960 and 7,052. Continuing with base metal updates, copper prices are expected to trade within the range with an upside bias, driven by China's largest trade surplus in nearly 2 years. The surplus surged to dollar 99 billion in June from dollar 69 billion in a year earlier. With China's exposed growth of 15-month high and positive sentiment is volatile. However, upside might be capped by the higher LME and SHFE inventories amid weak demand. For copper futures, intraday support is around 847, 843. Resistance is around 860 and 863. Talking on currency front, dollar continues to hover around 1044.50 on slightly weaker level. Were set to decline second and is set to decline second week straight week as cooling inflation and latest central bank announcement cemented expectations for interest rate cut in September. Rupee is for today. Rupee is to see slight relief after U.S. inflation data, which indicates Fed rate cuts, so dollar would be little in pressure and rupee would be in advantage. Whereas yen is witnessing a swing movements between highs and lows, and due to the inflation data, U.S. inflation data, yen turned out to be stronger. But there are again interventions talks going around, so it would be in swing movements. For today, economic data, important economic data are U.S. core PPI, your US consumer sentiments, inflation expectations, and India inflation rate as well. So that's it for today's podcast. Have a successful trading day. Thank you.